welcome to Listen to the Market for Thursday, the 23rd of February. On screen, as per normal, we have the 1 hourly chart, the 30-minute chart, and the 15-minute chart. The previous day, Wednesday's lows have been marked, as well as Wednesday's highs have been marked. Because of the proximity to the current prices of the weekly high, that's also marked, as is the monthly high, which in fact is the high for the year. So answering one of the questions before, how many lines on a chart is dictated by the price action and where the market is. Let's start with rolling through all the 1 hourly bars to see what transpired yesterday and what opportunities were there. Starting out early in the day, there was a little FO selling through there. Market came down, broke the lows in through there. The next bar gave you a FO 1R buy setup. Market then rallied. The little bar in there was an RTV buy. Entered, stopped out. This is another RTV buy, this time entered, and on a simple trail basis all the way through there, quite a handsome R return. Now in terms of when in a 24-hour clock did they occur, this one was outside the optimal hours. It occurred before 7 p.m. Vanuatu time. No one can trade 24 hours a day, 5.5 days a week. So it's a matter of deciding from your own perspective, which is your time zone, which is your time frame when you can afford to trade, when you can afford to exchange your lifetime to sit in front of a PC. Having done that, you then need to attract the right rule set, the right approach that fits in with your objectives. And that's a very personal affair. What is your objective out of trading? I know, to make money. Well, of course it is. But how do you want to make money? Do you want to make money in an exponential way or an arithmetic way? Arithmetic, geometric, high-level maths? No, not at all. Arithmetic is simply a slow and steady growth. Geometric is looking for the power of compound to kick in. For the power of compound to kick in, you need to have a large number of trades, or a larger number of trades, than for the arithmetic. So again, from my perspective, this is the business of trading. One needs to sit down and establish what are the objectives of the business. That's enough for the general stuff. Now let's have a look at a really perfect scenario that happened last night. In fact, accurately, this morning, 2 a.m. my time. On the hourly chart, there was a 3S buy. That's another setup in the L.I.V.E arsenal. The 3S buy setup requires the knowledge of fluid movements, which I sort of mentioned to you in the weekend's Q&A video. So the fluid movements, the 3S buy was present there, as it was also present on the 30-minute chart. Great example of the fractal nature of markets. Fancy way of saying whatever you see on one time frame, you're going to see exactly the same patterns on another time frame. That's not to say that they'll be occurring at exactly the same time, but the same patterns repeat with monotonous regularity. So there was a 3S buy as well as an FO buy on the 60-minute. 30-minute was also a 3S buy as well as a FO buy. And on the 15-minute, what do we have here? We had a FO buy 1R. So the three clay pigeons lined up for a buy along, starting inside the optimal time window, 2 a.m. my time. Let's follow this one through simply on the hourly basis. Entries achieved, promise of higher highs, all is well. You have a sell set up against you, change your stop to a break even. The market is saying, hey, it may come down. So your ISL is moved from there to your break-even point in through there. What happens the next hour? We've come down, hasn't broken your break-even. You can now raise your stop to that bar's low. Second setup of this run-up was a RTV buy. Let's look to add to that position. The break of the low by this bar did not trigger the stop loss, courtesy of the formula, I guess, the way I calculate entry levels and ISL levels, which is not mainstream. So here we are, period 3 of the campaign, nicely in profit. Just sit back. Market rallies some more. Looks like the magnet is attracting things. We've broken Wednesday's highs through there early part of the day, broken the weekly highs, and now we're trading at highs for the year. Smaller range, clear warning that something's going on. Warning is a warning. It's not a sign to get out of the market. Entered through there, trail up through there. Icing on the cake. Wee hours of the morning. Promise of higher highs to come. The higher highs have been fulfilled. The trailing stop loss is up through there. Very laid back, very comfortable, just following each bar. The 30-minute view, all the way through, gave you an RTV buy there. Not entered, still an RTV buy there. Not entered. Now it's become a regular retest complete with a buy timing tool. And a retest is another one of those setups in the L.I.V.E arsenal that requires the knowledge of fluid movements. So there's a second buy in through there. The rally, higher highs, higher lows, expansion of range, promise of higher highs to come. Oh, not fulfilled. There we go, fulfilled. And we're still only in through there on the hourly chart. There we go, off to the races. New highs for the year, well and truly yet again. In through there, in through there, in through there. Clearly the market's saying, running out of steam, running out of steam. Oh, okay, been stopped out. So on the basis of the top down, the 60-minute and the 30-minute lined up, the 15 did as well, on the basis of just the 30-minute. Entry number 1, entry number 2, entry number 3. Not that I play baseball, but I really do highly regard the 3 strikes and you're out. By definition, the third setup in the same direction within a movement must be closer to the end of that movement. So that can be taken into account in terms of your money management. Perhaps take a smaller bet size than you would in the middle of the movement or the start of the movement. There's many flexible points in there. Let's have a look at what happened to the student trader last night. Well, there were 3 campaigns. The initial campaign was a buy in through there. Second campaign was a sell down through there. And the third campaign was another sell in through there. He quit a bit early before midnight because he wasn't feeling well, he wasn't focused. He recognized that and said, okay, that's enough for the day. And what was enough for the day? It was about 4 hours for the day. His return was 2.07R for the day. So $2,070 or $207 for 4 hours work. It turned out to be 0.59 of an R per hour. So $100,000 size, $590 per hour, or $59 per hour. And 3 winning campaigns out of 3 campaigns. Now comes the interesting question. In your eyes, did he do well? And yes, he is a boy. Did he do well? 3 winning campaigns out of 3, a return of 2.07R, and earning 0.59R per hour. In the context of the rally from those lows to those highs, not very well. Our return was rather small. In the context of the rally from here to through there, not very well. But he wasn't around for that rally. He's not Superman. He decided to quit before this rally. So let's view his return in the context of what was there on the table. First campaign was in through there and up through there. Nice. The brief was to capture as much as he can of the movement up. The next brief was to capture as much as he could of the movement down, which he did. And likewise of the third campaign.
So to me, success is a personal success in terms of following the rule set rather than going, well, if only I had, if only, doesn't count in reality. That's it from me, guys. Thank you much. Catch you next time round. Bye for now.